Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, once again, pretty boring market, guys. Not much has changed since last week. So basically it's hanging around this 74, 75 level, hanging sideways since middle of October. Okay, so really at this point of time, just waiting for that breakout. In the meantime, mainly from a trading perspective, we've been trading a lot of time decay strategies using options, so bull puts, bear calls out of the money, and short iron condors. Okay, so that's the strategy that's working in the current marketplace. Our markets lagged way behind the US, where they've just continued to climb and climb and climb, and once again they're starting to look a little bit overdone. Okay, so really about anything 10 to 12% off that 200-day moving average is starting to look a bit overbought. Last week it looked like we're going to see a dip in the US, but it didn't really continue out. They've bought the dip straight away and pushed it back up towards that all-time high. So once again, look, things are a bit overdone over there, but it has been that way for a while now, and it's just a matter of time to see whether it's going to break higher into all-time highs or it's going to break back out of this pennant to the downside and see a further pullback into the market. I suspect that this week could be still a bullish week, but then wrapping up reporting season in the US and that sort of thing. But there's a few headwinds coming up for the US, so it's going to be interesting to see whether that will actually see some people taking profit here or not. Okay, so right now the talk of the town is inflation. Okay, so obviously we're starting to see a lot of inflation come through on a lot of goods. Okay, and you could easily blame that on the supply chain problems. Okay, and that's what most central banks are actually blaming this on at this stage. But it's going to be interesting to see whether that keeps creeping through the rest of the economy or not. So inflation, for me, my opinion is most of it is caused by a rebound from being locked down because of COVID. It's been also caused by, like I said, supply chain problems. So it likely will be transitory, okay? As manufacturing plays catch up, as delivery services and couriers and that sort of thing all play catch up. Obviously, getting a container ship of goods from one part of the world to another throughout this year has been quite difficult, and therefore prices across the board with a lot of goods have gone up because of that, right? So, but all these things will clear over time. Not to say prices will come back down, because when prices come back up, they tend to stay high. But in saying that, the rate of inflation should smooth out a bit. Okay, and come back down to some normal levels again next year. In fact, what might end up happening, and I think this is what central banks are telling us, is they suspect in a year or two we'll actually have inflation come back below their target very quickly. And I suspect the same thing. Only reason why we're seeing this inflation is because of COVID. Pre-COVID, we had a bit of a deflationary problem. We're talking about negative interest rates. Okay, so really at this stage for me, most of this is all positive. Okay, if central banks do decide to increase interest rates, and let's talk about central banks now, if they do decide to increase interest rates, it's because they think the economy can stand on their own 2 feet. They don't need all those stimulus type measures that we've seen. Right, we don't need the accommodative stance anymore because the economy is strong. Okay, therefore, if interest rates do go up, that's very positive equities, guys. Right? If you go back in the past and have a look at when the Fed has increased interest rates, the US markets have increased significantly those years. Okay, significantly for those years. So as long as they're increasing interest rates because the economy is strong, not because they're trying to battle inflation that's being caused by supply chain problems. So even for me, even the thought of interest rates going up here is a bit crazy, okay? Because they're doing it for the wrong reasons. So the other sort of flip it on the other side and say, yes, if they increase interest rates, demand will go down, but you're just going to cause yourself a bigger problem there because you're just going to really decimate the economy, right? So interest rates should only ever go up if the economy is extremely strong and can stand on its own 2 feet, right? But my view is next year you won't see a rate hike out of the RBA. that you may get something out of the Fed by the end of the year, but I very much doubt it. To see any rate hikes at all, to be honest. And if it does, it won't last long. It'll be 1/4 to 0.5%, and that's all they'll do. That's my view at this stage. That could change as things roll on. But at this point in time, I believe that central banks of the world are more focused on tapering than bond purchasing programs. I think the people that are speculating on interest rates right now are looking a bit too far forward. I can't say the next 3 to 4 years is going to be any certainty there, right? We're coming out of these crazy lockdowns because of COVID. The economies and a lot of the economic data is going to go a bit crazy for the next 6 months as we come off a very low base caused because of these lockdowns. And let's see what the wash up is after that, right? So I think people are looking a bit too far forward when they're talking about equity markets at the moment. Some positives, right? So one of the positives floating around out there at the moment is this China-US meeting, okay? So we've got Biden and Xi Jinping meeting around climate change, okay? This is the first time we've really seen a positive meeting between the two countries since Trump. So, look, this could be a path forward to more civilized sort of action between US and China, Australia and China. Let's see, okay? We're seeing a little bit more optimism around the mining sector right now on the back of this. We're seeing, the miners pop up a little bit on this sort of type of news. But yeah, just watch this space carefully, guys. The relationship between China and the US, or the West and China, is very, very important, okay? So let's just see what happens and how this plays out in the near future. Debt ceiling, this is the next big thing, guys, okay? So no one's really talking about it yet. We saw the US industrial bill pass and get signed in, okay, this week. Most focus is on that and on reporting at this stage. Coming into next week, though, I suspect we're going to hear a lot more about this debt ceiling. I believe next week they're going to come back and start really trying to solve this problem. If they solve it, I can say think we'll get another rally actually from here. If they don't, if they drag their feet like they did last time and get too close to the deadline, which is very early December, a couple of weeks away, then that might be an excuse for the US to take some profit. Okay, so I just think US markets are teetering around a bit overbought in the short term here. I'd like to see a pullback. I honestly would like to see the US pull 2 or 3% back to take some profit. That will set up for a nice big Christmas rally. So let's just see. Okay, if this debt ceiling issue could just be enough to see that 2 or 3% pullback that we typically get this time of year when the US reporting finishes. So yeah, that's kind of what I'm holding out for right now. Okay, so that's about it, guys. Outside of that, the market, like I said, our market's just very sideways. Miners are stuck at the bottom of their range. Looks like they could have bottomed out. Your big 3 iron ore miners looks like they could have found a bottom here. But nonetheless, with the banks pulling back, the miners staying weak, it's really hard for our market to push higher. Alright, so we're going to need some movement in the banks and the miners to get this market back into all-time highs. We might be waiting a little bit for that all to happen. Alright, so unfortunately there's not a good guide on what this market's going to do next. We're just trading the sideways move at this point, starting to load up more around the condor side of things, like short iron condors, bull puts, bear calls, that sort of thing. If you don't know what they are, they're option strategies, something you should look into for times like this where the market does just start tracking sideways. And honestly, we've seen sideways markets last for months and months and months, right? I think the longest one I saw was about a 7-month sideways movement. And if you're trading directional, it can be quite boring, guys. Okay. Alright, so that's where we're at. Not much else to say, guys. Alright, we're just waiting for something to happen. A bit on the sidelines right now. And as I said, trading sideways. Okay. Thanks for listening in, and bye for now.